What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Wei Li, Global Chief Investment Strategist at BlackRock. We just had 3 years of double-digit returns for S&P 500. That is quite rare. And if we make it into 4, depends a lot on earnings. Q4 is starting to report, and there are 3 themes on my mind. The first theme is some broadening out, i.e. the gap between recent earnings outperformers and the rest of the market shrinking somewhat. And here I'm referring to MAC 7 and S&P 493, but also US market have been leading in earnings delivery and the rest of the world. The second theme is mega forces supporting some cyclical sectors. BlackRock rolled out the framing of mega forces almost 4 years ago, and they have been quite helpful in understanding the markets and the economy. If we look at AI, which is one megaforce, what that means for hardware and building construction and energy. If we look at energy transition, which is another megaforce, what that means for grid upgrades and renewable projects. If we look at geopolitical fragmentation, there is another megaforce, what that means for defense spending and defense infrastructure. And when we bring all of them together, there are sectors, some cyclical sectors like industrials, like material, industrial metals that sit at the intersection, and that is quite powerful. The third theme is watching productivity boost starting to appear in some sectors. And here, the pattern for earnings that we should watch out for through the course of the year is that we start the year strong, but through the course of the year, analysts then guide it downwards bit by bit. That pattern may still repeat, but offsetting that, or at least partially offsetting that, maybe productivity boost coming through because of AI. And here some sectors that we watch out for, tech is of course communication services, but also healthcare. Our fundamental equity global CIO Carrie King calls healthcare the sleeper sector. Many names are heavily discounted versus historical averages, and at the same time 80% of those companies are guiding upwards, so a powerful combination. So the big picture is that yes, we start 2026 risk on, supported by robust earnings, supported by good growth backdrop, and also central banks, in particular the Fed, poised to cut further. But underneath the hood, there are sub-themes that are playing out that are really, really interesting, that allow us to be active and selective. For details, read our market commentary on a weekly basis. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you have enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.